Coke reports solid earnings, but is there more fizzle to Coke's pop? Joining me, Stephanie Link, Director of Research for The Street. Coke made 72 cents a share in the fourth quarter here, but the stock is down about 4% for the year. How much of a growth play really is Coke right now?
Well, you know, I think relative to other consumer staple stocks, it's one of the best in terms of, you look at volume growth, organic growth, you look at what they just put up in terms of earnings and revenues. I really think that this company is doing a very good job across all of its products, across all of the regions. And you can't necessarily say that for a lot of the other consumer staple stocks. I mean, look at, you know, Colgate and Clorox, and even Pepsi has been kind of inconsistent. So I just think that this is a great company. It's down on the year because people were nervous about high raw material costs. And I think that, you know, those concerns were overdone. The stock sold off. I think it goes back to its highs.
So you're saying that inflation and rising input costs are not long-term worries at all?
Well, I would say that they have offsets, right? They have 140 to 150 million in cost synergies alone from the CCE deal this year. They also have 500 million in productivity program initiatives that are underway that they will also realize. So they have a lot of cushion to kind of combat the higher inflation fears, which a lot of their competition and a lot of the other consumer staple stocks, they don't have. They don't have those offsets. And so when we decided to make this our biggest staple position, I was looking for, okay, what are they doing to offset it? Because that's the one negative, I think, and that's the one thing that you can knock on the stock, which is why the stock's underperformed year to date.
So then what's the biggest risk if investors want to get in here when the stock is down? What should they know about going forward?
Well, I don't think there's really a lot of risk, not at this level. The stock typically trades at a 15 to 20% premium to the group. It doesn't even come close to that right now. And I think that you have superior growth, you have strong brands across the board, and you have an excellent management team. By the way, they also grew cash flow 16% for the year last year. So they have a lot of cash that they can play with. They're going to buy back $2 billion in stock this year. They're going to probably announce a dividend increase, I think. And I just think on a relative basis, looking at the risk reward, looking at what the stock has done year to date, I think this is the one you want to own.
All right, thanks, Stephanie. I appreciate it. Still more growth potential in Coke. Stay tuned for more from The Street.